Dave Knight here at Knight Capital Management. Thanks for watching. Thanks again for being here. About 1 year ago, we did a video series of our top 10 frequently asked questions, the FAQ questions, that I receive as a trader. And what we did is went through those top 10 questions last year. Now, in those top 10 questions, I hinted towards the top 10 should ask questions that you should be asking as a trader, and questions that I want to share with you on this video series. So what we're going to do now is start answering the top 10 what questions that you should be asking as a trader. Now, the top first question that I believe that you should ask as a trader is, at least in my humble experience, because of where my background comes from, is what is VSA, or better yet, what is volume spread analysis? Now the concept of volume spread analysis as a term was developed by Tom Williams in his groundbreaking book called Master the Markets, which if you don't, you can get a paid at TradeGuider.com. They have this ebook available. I believe the price of that ebook is $9.95. Well, anyway, before Tom Williams put that book together, a gentleman by the name of Richard Wyckoff, he wrote a book, Daily Bible. Anyway, I have that in my Daily Bible of stock. Anyway, so he used the stock markets, and he started using that to help him. And a gentleman before that a lot of us as traders know is Jesse Livermore, who I guess it was reminiscences of a stock operator and so forth. So the history of this kind of concept in trading dates back to basically the early 1900s. So it's been around more than 100 years at this point in time. And through the work of the hard, dedicated work through Tom Williams and the traders before him, it's helped to develop this trading strategy and I guess, if the lack of a better way of saying this, the different ways of taking Tom Williams' work that I have taken on through his book and the work prior to that to help me understand how the markets trade and so forth. Now, that's kind of the history of the VSA, how it came to develop and so forth. Now, there are three basic components of volume spread analysis that I believe, in my humble opinion, influence the markets as a whole. Now, there volume spread analysis. So the first word in that name is volume. Now you see a spread in there and then the analysis part. Well, volume is the most important part. Now, why is volume important? Because volume can tell you if there's going to be a blow off top or a sell off bottom, or all kinds of other things that you can start to determine by volume. Low volume periods, high volume periods, and so forth. Like a low volume period might be an area of illiquidity, where you see a high volume period be lots of liquidity in the market and very easy to get in and out of that market, correct? Also, patterns in volume can develop so that you see an ascending volume pattern, and you're able to trade off of that. A descending volume pattern, you can be able to trade off of that. So an ascending volume pattern might be a nice buy signal, might be a nice sell signal, depending upon the trend of the market. Where the descending might be once again a good buy signal, but more importantly, the descending volume might be a better sell signal, in my humble opinion and experience. But that's volume. Now, volume is one key component. Now, the spread deals with price action, and that's the second component. And what the work went through to do is determine the spread of the high against the close, the high against the low, the open against the close. So taking a normal bar chart and determining exactly what that is telling you. Now, one bar chart's not really going to help you, but a bunch of bar charts together, a bunch of candlesticks together, start to form a pattern. Now, there's an art to that pattern, and determining that is also a form of technical analysis as well. And this study, VSA, gets its roots in technical analysis. Now, I'm a trader that does not ignore the fundamentals, though. So just taking this trading strategy by itself, I believe it's a great trading way. I don't support TradeGuider by any way. I don't know anything other than the ebook that he's written and the book, obviously, that he's written that they sell on that website. But before I even knew who Tom Williams was, I heard of Richard Wyckoff and his work and so forth. And then I was like, well, it doesn't matter. That's not here or there. But So you have the spread of the market and how that tells you, you might have an island reversal coming on one side or the other. You might have an ascending triangle. You might have a descending triangle, a pennant, a flag. There's all kinds of technical terms. A bullish flag, a bearish pennant, all those words that people throw around. But how do you determine if you're in an ascending market that's going to continue to go up or a descending market that's going to continue to go down? How do you determine if this is the top of the market and it's getting ready to go or turn over? And likewise, how do you determine if the market has hit a bottom and it's getting ready to come up? Well, through my experience as a trader, over my 25 years of experience that I've had in trading, I've been able to take the concepts of a bunch of different traders and help me to determine what's the proper way to trade. Now, I'm not saying that Tom Williams' system is I don't know anything about the man other than the book he's written, which is a very good book that I highly recommend that you have in your trader's library. But I've taken his work and developed my own trading strategy based upon his work. Now, the third component that I believe is important to the VSA concept, and they talk about, I believe that third concept is called momentum. And momentum in a trade will help you determine, and Larry Williams probably said it better than I do, you want to try to catch a little in the middle and take a little bit along the way on that ride. And we talked about the pyramid shapes, and if you read any of my material that I've put out there for free, you know how I believe in the pyramid shape as it relates to trading. Now, the inverted pyramid shaped like this, right, is not a very good pyramid shape. Where the pyramid shape, obviously with the base across the bottom, this kind of pyramid is the strongest structure known to man. The Egyptians 5,000 plus years ago put that together, and it's still standing to this day. Just knowing that, if you have an inverted pyramid built like this, a wind could topple it over, right? Where this kind of pyramid itself is a very strong structure. So, using the concepts of VSA, volume spread analysis, or price action, volume, and momentum can help you determine more times than not if there is a good or a bad trade, or is it a manipulated trade. And I think some of the work that's been done in that arena through various different traders and mentors and guides that I've had along the way has helped me understand that a lot of the time prices are being manipulated by other people that obviously, as a small account trader that I am and that many of you are out there, that we don't understand the underlying things that are going on, that sometimes traders come in to buy up the market to send it up so they can sell it off higher. And likewise, they sell the market so they can buy it under, and their true intention is for that market to go up. We, as traders, do not have, most of us, do not have that information to be able to say, now, this is the way to go about trading. But I think Joe Ross says it really well too, by the way. He'll say a concept called be the remora, the shark and the remora. Now, Joe Ross talks about be the remora, not the shark. Now, the remora is a pilot fish that goes behind the shark and eats the crumbs behind that shark. That's a visualization that I learned from Joe many years ago that I thought, that's the kind of trader that I want to be. I can't get in front of these. I don't want to be in front of them, right? Because you get eaten up. Now, I remember that visualization just like he told me it was like yesterday. But I remember the pilot fish behind taking the little nibbles along the way, trying to catch. So in other words, the key to trading in the VSA concept is to find that area that you can catch a ride with the smart money on the upside and catch a ride going down with the smart money on the descending market. In other words, the trend is your friend. I think this is the number one should ask question as it relates to trading, as it relates to me, Dave Knight here at Knight Capital Management. I welcome your questions. Is there any question that you might have that you'd like me to answer? Feel free to answer. Now, on our website, you'll see a channel that we call the Tiger Trading Channel. This is where we're going to put our top 10 videos, which you'll see last year's frequently asked questions, and I'm going to put the top 10 should ask questions as traders. So come visit us at knightcapitalmanagement.com. Look at all our free content. We encourage you to take a look. Take a look at our new, we're actually taking our early bird list at the TCB Crude Oil. Our next product launch will be coming out in May of 2011. We encourage you to take a look at all our information on the website. that's about all I want to talk about today. It's 10 minutes of your time. I appreciate you taking 10 minutes out of your life to listen to me blabber for a little bit longer. If there's anything we can do to help you in your trading and also in your career, just get in contact with us off our Contact Us page. We'd be more than happy to answer questions. You can get me through Skype, you can get me through phone, you can catch me through email. I am not going to hide. If you call me, I'll call you back. If you send me an email, I'll email you back. If you leave me a message, I'm going to answer that message. I'm not hiding. I'm here to help. This is Dave Knight here at Knight Capital Management. Thanks for being here. Thanks once again for listening. If there's anything, and I mean anything we can do to help, just let us know. And that'll be it for this question. We'll see you on our next video on the number 2 question, on the top 2 question that you should ask as a trader. We'll see you on the next video. Bye now.